Hello and welcome to Talking Points. It is D-Day today, D-Day for the revolution according to Eric Cantona. Of course, indeed, the former football star wants you, the small saver, to withdraw all your money from your bank today. The idea to create a run on the banks that would cause, in his words, the system to collapse. Well, to discuss Cantona's call for a revolution of the small savers, I'm joined by Catherine Luboshinsky, who is Professor of Economics and Finance at Paris 2 University, and Monsef Sheikh Roux, who is Professor of Economics and International Finance here in Paris. Thanks very much to both of you for being with us. First of all, Catherine Luboshinsky, is this likely to have any effect? Do you think people are, in any great measure, going to head out to the banks today?
No, I think a few people are going to head out for the banks today. I'm not sure it's going to have a big impact on banks, fortunately, because it could have been a disaster. And if you look at Cantona, he did indeed asked one bank to withdraw his money, except that he didn't mention that he probably has several bank accounts.
Yes, and indeed no mention of the precise sum. Apart from that, it was more than 1,500 euros, which we might have guessed. I wonder, Monsef Sheikh Roux, whether you feel that the call in itself, it does seem to have attracted something of a buzz. Whether or not people will actually go out and do what he's calling for them to do today is not yet entirely clear. But 100,000 people have signed the petition on Facebook, and it does seem to have touched a nerve with people.
Yes, whatever number of people that are going to be following Cantona, all this is going to be trivial at this quantitative stage. It is trivial. But it would be a mistake to think that the ethical part behind it is trivial. People are worried about what is happening in the banking system and in the financial system, financial markets nowadays, starting from President Obama, who has been trying to negotiate some changes in Wall Street with President Sarkozy, with the G20 saying, hey, we have to set a new set of rules, and ending with Mr. Soros, who made lots of money betting against the pound long time ago. Now he's getting back to some ethical stand, saying that in 1945, post-World War II, the share of profits that was going to the banking financial sector in the United States represented only 7%. In 2008, in the middle of the crisis, that share mounted to 45% of total profits. Is this good for the economy? Not clearly, because the real economy that's represented by employment is still suffering a lot.
That's the point, isn't it, Catherine, that for a while, especially in the wake of that 2002 financial collapse, there was a great deal of talk about ethical banking, how the system would be restructured to avoid the excess of the past. And to ordinary people watching from below, from outside almost, one gets the impression that, in fact, it is the same old, and nothing much has changed. And it is indeed the banks who seem to get off scot-free every time.
Well, nothing much has changed. That we can be sure of. That's because it takes a long time to change the regulation. If you look at what happens after each crisis, indeed the regulation changes and there are some improvements. Now, the major regulation that would stop this extravagant increase in banks' activity would be to limit the leverage effect. And that takes a long time because, of course, banks don't want to. Now, people have to keep in mind that there are different types of banks. Now, we have deposit banks and there are investment banks. Now, deposit banks are banks that manage your bank account and lend you money either for consumption or to buy your house. Now, these activities are needed because they also lend money to companies for their treasuries, for their investments, for everything. Investment banks have different activities. They go into the financial markets and trade, let's say. But you also have pension funds, you have hedge funds. There are many, many funds. Of course, people that have a little bit of money, when they invest in those funds, they want the highest return. So there's a conflict of interest between the households that want this maximum profit over a short term of time and people that say that banks should not look after maximum profit over the short term.
Yes, of course. Yes, of course, because there's a weird thing. Mr. Cantona and Mr. Paul Volcker, the former governor of Central Bank of the United States, the Fed, who is an advisor of Mr. Obama, both of them are practically saying the same thing. Banks, according to Mr. Volcker, should be limited in the way they use people's money. If they use it, as my dear colleague is saying, Mrs. Lubachensky, fine. The banks are doing their job. They're getting our deposits. They're transforming those short-term deposits into middle-term and longer-term loans, and they're creating jobs, they're creating wealth, they're creating prosperity. But what has been happening is that many banks, instead of doing this, they have been using that money in order to go and bet. They call it speculation. Now, taking the money and betting is not exactly what we think is the objective of banks. And this is where the public is coming and saying, we are interested in making money, of course, but what is the origin of that money? Is that the real economy working, taking risks, making an effort, and enjoying these profits? Or is it just making bets, misusing some tools that are quite necessary? I'm teaching them myself. Derivative products are quite necessary. But my God, I mean, if we overuse them, aren't we forgetting the real economy behind that?
Well, perhaps, Catherine, just for that reason. I mean, we can accuse Eric Cantona. He has been accused of callow populism, but if only because he gets people to think about how their banks are doing and what they're doing with money and how they're spending it, and how, on a scale of responsibility, if you like, where they stand in choosing where to place their money. Maybe that's a good thing.
That would be the only good point he made. Sure, we have to think again. Lady. No, but that would be the only good point indeed. But banks have to think about ethics again. It is quite difficult because of the numerous conflict of interest that you can see in the movie Inside Job, which is an excellent movie. But you have to keep in mind that in Canada, banks had a stricter regulation that Basel II imposed on European or international banks. Now, they had more capital and they had a maximum leverage imposed by the authorities. Now, those Canadian banks do make profits, but were not in big trouble during the crisis. So maybe a lesson could be taught to the world by the fact that Canadian banks were properly ruled.
And even more, in democracies, this is a signal. Cantona's move will not revolutionize things today. I agree totally with you. But it's telling some news. People want things to change. So the regulators, which are of course, there, thanks to the administration, there has been elections representing the will of the people. The people are worried. How is this going to be translated? How's this world situation going to be taken into account? How is Mr. Dominique Strauss-Kahn going to make the IMF evolve towards more stringent rules? How is the G20 going to take into account the fact that we are on the same boat? And if banks fail in Scotland, it's going to be hitting many other parts of the world. So this is a serious problem. Mr. Cantona might be mad when he notices that nothing is going to be changing after his proposal. But if I were in the regulatory system, I would worry about not moving now.
Now, Catherine, we don't really know yet what effect it has had. I expect we'll have to wait to the end of the day to see whether his call has had any impact at all. But of course, it would take, I was reading 99% of all bank account holders in France to go and withdraw their money for it to have an impact. Tell us a little bit about how it would work. What kind of critical mass would need to be achieved so that some impact would be felt by the banking system?
Less than 99%. But you have to keep in mind that there's a group that has also started to withdraw their money, Cantona followers group. But the funny thing is they take out their money from one bank and they go across the street to another bank, mutual bank, to deposit the money. So, I mean, it stays in the system. And the second point is nowadays we don't use cash anymore. We use credit cards or debit cards, and we use checks, but we don't use cash. So it's pointless.
This is the point, isn't it? Is that actually the banking system may depend on us to a certain extent, and it's difficult to quantify, but we rely on it to an even greater extent.
Absolutely, and I'm totally agreeing with what my colleague is saying, because it takes less than 99% of the depositors to put a bank in trouble arithmetically. arithmetically. But in France, for instance, there is a regulation. If you want to withdraw more than 2,000 euros in cash, you have to tell the bank 48 hours in advance that that is going to happen. So nothing is going to happen today. Two, money is not the printed money. There is a word that I hate in French, which is planche à billets, the printing machine for money. The real money that is being created, it's, keystrokes on a computer now. But whoever is doing that, it's a monetary authority. And again, I'm worried, and people are worried, when they see the US using twice in a row what has been called very nicely quantitative easing. What is that? Just creating more and more money. God knows what is the counterparty of that money. Is it gold? Is it real wealth? Is it real economy or unsellable houses in the beautiful state of Arkansas? And in return of that, we are seeing injections of large amounts of money by central banks, by the American Central Bank, quantitative easing 1, quantitative easing 2. So, people start to ask, my God, what's the value of my money?
Yeah, then there is a point here that people feel that they are dependent on the system and yet have no power over what is done to it or within it.
I think people haven't heard about quantitative easing. I mean, the main point that people have to keep in mind is that banks finance the economy, plus some other things that we might not like, but they do finance the economy. In Europe, that percentage goes up to 75%. Now, if you destroy banks, or if you don't help the banks to survive, even if they've did something wrong, which they have, we agree, but you have to help them to survive, because otherwise no one's going to finance the economy and everybody's going to be unemployed, or yet, not 10%, 20%.
And yet one feels someone should be able to make them pay.
Yes, but that's another question. You shouldn't mix them together. Yes, they have to pay, they have to reimburse the costs of their wrongdoing, but they have to be kept alive.
Thanks very much to both of you. I'm afraid we're going to have to leave it there. We're running out of time. We will keep a close eye, of course, here on France 24 to what happens to the French banking system over the course of the day. Thank you to you for having been with us on the programme. Thanks to you for watching. We'll be back in just a few moments with all the very latest international headlines. Do stay with us.